Okay, now we're going to do a problem with Omera Travel Agency. We're going to look at business transactions and how they affect the balance sheet equations. And these are the accounts: the assets, cash, accounts receivable, supplies, and equipment; liabilities, accounts payable; shareholders' equity, common stock; revenue, expenses, and dividends. So on April 1st, they established business, and the following transactions were completed. Number one, shareholders invested $3,000 in the business in exchange for common stock. Well, two accounts. One, cash goes up $30,000, and common stock goes up $30,000. $30,000 on one side of the equal sign, $30,000 on the other side. So we're in balance. Then I paid $900 for office rent. Well, if I paid cash, then it would be negative cash $900, and office rent is an expense, and we set that up as negative over here because it reduces retained earnings. Number three, we purchased office equipment for $3,400. Alright, so we paid cash, so negative $3,400, and I purchased office equipment, so over here it's positive $3,400. Now I have a negative and positive, but both sides on the same side of the equal sign, so therefore I'm still in balance. Number four, I purchased $200 in advertising on account. So if it's on account, it's over here. My accounts liabilities go up, my accounts payable go up $200, and I purchased a advertising expense, so that goes, advertising expense is negative $200. So I have a positive and negative both on the same side of the equal sign. Then I paid $500 cash for office supplies. So my cash goes down $500, but my office supplies go up $500. Again, a negative and positive on both on the same side of the equal sign. Number six, I earned revenue. When I provide services, I earn revenue, so it's plus $12,000. Right off the bat. Now, did I get all cash? No, I only got $3,000 in cash. But I took an accounts receivable, so he's going to pay me $9,000 later. So I have $12,000 positive on one side, $12,000 positive on the other side. Number seven, I paid a dividend, so down $400 cash, and over here negative $400 for dividend. Then I paid the amount that I owed for advertising, so therefore it's a negative $200 here, and my accounts payable goes down by $200, so it's negative $200 under the accounts payable. Then I paid the employees' salaries, and the salaries were $1,800, so I write $1,800 here, cash goes down, negative $1,800, and over here salaries, negative $1,800. And lastly, I received $9,000 from the guy that owes us up here. Well, that means that my cash goes up $9,000, and my accounts receivable goes down $9,000. So therefore, if I was to add all these transactions on the effect they had on cash, I'd have $34,800 as my balance in cash, 0 as my balance in accounts receivable, $500 my balance in supplies, and $3,400 my balance in equipment. If I was to add these, then on the asset side I have $38,700. Now my liability and equity side, well, to begin with, my accounts payable is 0. I paid it off. My common stock is $30,000. My revenues are $12,000. My expenses are $2,900. And my dividends was $400. So if I add my liabilities plus my common stock plus my revenue, but minus my expenses and minus my dividends, I again get $38,700. So you see, we recorded all these business transactions, and the recording of each transaction is such that the balance sheet equation remains the same. Assets equal liabilities plus shareholders' equity. Okay, so now if you finish that one, we will go on and do Jarvis Consulting next.